Here, I get this question a lot, Dallas, and it's, hey, capital gains. Can you just kind of break capital gains down for someone who is like, what is capital gains? How do I do capital gains? All that stuff.
Capital gains. So this is an asset that you have bought, you have held, and you've owned it for longer than 1 year. Now, the great thing is we have ordinary tax rates. So that's what you pay on your ordinary income. Think wages, dividend, interest, business income.
Okay.
Right. We've got all these different brackets is what we call them. There's a 12%, there's a 22%, there's a 35%, right? There's all these different brackets the more money you make. Now, in the capital gains, right, we have 3 brackets. Okay. And which bracket you're in on capital gains actually depends on which bracket your ordinary income is in. So it's not like, oh, if you made this dollar amount, you're in this bracket. It is a little kind of like that. If you're in the bottom 2 brackets, which is the 10 or 12% bracket, you pay 0 long-term capital gains tax to the federal government.
Okay.
If you're in any other bracket except the top bracket, you're paying 15%. If your income is in the very top of the federal income tax bracket, now you're paying 20%. So you got to be making more than $630,000 to be there.
Okay.
So it couldn't be easy, right? You would think it would be easy, right? You have long-term capital gains, so here's the percentage that you... No. We got to complicate it, right? So that's what they've done. So a lot of things that, at least from my perspective, Idaho does not alter that much, which is good. They're trying to keep it simple. And again, that's my perspective. So Idaho typically doesn't have breaks for capital gains.
Okay.
So if I sell some stock, I pay the state of Idaho 6%. Now that does change if we're talking about land, typically.
Okay.
Idaho does give us a break if we've bought the land inside the state of Idaho. It's a capital asset, so we've held on to it for longer than a year. We sell it. Idaho does give us some breaks for that, and that's a great thing. Now, that's kind of here and there. Oftentimes, the question will come, especially in real estate, of, well, I bought my home, I sold my home, do I pay capital gains on that? Right. Like that's the next natural, and oftentimes, the largest asset that individuals will own is their home. And so we want to be very cautious with it, right? Like we've put a lot of time and energy. We've loved this home. We've lived in it. It's been great for us. Well, what we don't want to do is now have to pay tax. So about 20 years ago, the federal government Congress changed the rule. Notice I didn't say Internal Revenue Service. They don't change the rules.
Right.
Congress changes the rules. What it is if you are married, filing a joint return, if the gain on the sale of your home is $500,000 or less, and you have lived in it 2 of the last 5 years, then you pay no long-term capital gains on it.
Okay.
$250,000 if you're single.
Got it.
So, rudimentary example: you buy the house for $500,000, you sell it for $750,000. That's a gain of $250,000. You're a couple, married filing joint. There's no tax on that transaction.
Got it.
Now let's go to one that's more realistic. Bought the place 30 years ago for $250,000. We just inked it for 1.5 to sell it. Right? That tends to be more realistic.
Okay.
Well, then we look at it and we say, well, you just had an increase of $1.25 million.
Yeah.
Right? $500,000 of that we don't have to pay tax on because that's the exclusion. And so then we get a lot of people saying, wait a minute, I got to pay tax on $750,000 of income, just my home, right? Can't I sell it and then buy another one of equal? Well, no, those are the old rules. We don't apply anymore. So then we start looking at things like, well, what have you done to the home? Did you have to put a new roof on? Oh yeah, we put a new roof on at least a couple times. Okay. What else? Oh, we put that pool in. Yep. Okay. So now we've got to start capturing all of these costs that you put in to improve your home over the last 30 years to keep it the way that it is. Are you going to walk away paying some tax? Probably. Is that awesome? No, it's awful, actually. It is awful. And I'm sympathetic for those situations, right? This is, people really kind of bank, if you will, on their homes.